Hello everyone, and there's been an awful lot happening in markets, and I've got to say it is tending a little bit more to almost random across a range of markets, certainly on a day-to-day basis. I do think though that the overall trends remain in place, albeit with significant corrections. I mean, if we just look at the gas price, it's had a massive downward correction in recent days, and yet it is still double its price since the crisis began, or since the start of the year. So I think the point I want to make there is that commodity prices are going to bounce around, but where they are, they will continue to generate significant inflationary pressures. Because remember, when commodity prices go up, there isn't necessarily an immediate flow through to products, goods and services that the consumer uses, but it will get there. It will definitely arrive over a few weeks to a few months. So continued high elevated commodity prices will force inflationary levels even higher than they currently are. So my forecast for US inflation to hit 10%, possibly 12%, remains intact. It's a long pipeline. It's going to continue for a long time. But the real concern is that, of course, all around the world, wages have not kept pace with these inflation advances. And that means that the consumer will remain squeezed. So how this works in terms of you're hearing about should inflation begin to trend down at any time, and that sounds like good news, not something I'm expecting, but should that happen, don't get too excited just yet about economic growth, because the elevated prices will remain and all be still climbing, edging higher even with a lower inflation rate. And that means without wages having caught up, that consumers will be squeezed and probably looking for some form of pay rise, as we're seeing with the labour movement in Australia at the moment, and could well become an election issue for the Labor Party as we move closer to that election date. My tip is, we just had a interesting debate yesterday between the two leaders. It looks to have been, some people are calling it a tie. Some people are saying that it was a slight edge to Albanese over Morrison. In either case, I don't think it's the outcome that the Liberal Party was the coalition was looking for out of this debate. They really wanted Morrison to have a big win, if you like, to help regain some of the lost ground in the polls. And whilst the betting has tended to equalise a little bit, and I saw that was a bit of a big story and everyone got very excited about the odds at the betting houses starting to equalise and close in sort of a more equal Labor-Liberal coalition outcome scenario, though those odds, you've got to think about the people or the groups of people, the communities who are using those betting agencies, and I have a feeling they might mostly be Liberal voters, but I could be wrong on that. It isn't a random poll. The random polls are still showing that really Labor is going to be the victor here, and I forecast about 2 months ago that the ALP would win this election. I forecast at the previous election that Morrison would win, so it's not a personal bias toward either side, it's just the reading of the tea leaves. I do think we're going to have a change of government. That adds a little bit of uncertainty, but look how strong Australian equity markets have been doing. Can it be sustained? I'm not sure, because I see I see the US market as being a little confused. The Dow Jones looks like it wants to break up and resume the major uptrend. The Nasdaq looks like it's about to crash through its immediate support levels, and the S&P 500 is oscillating in between the two. And then when we come down to Australia, it's all about this safe haven idea, and I guess we really have no idea how much money is out there in the rest of the world that might view Australia as, well, maybe while all of this is going on, given that there could well be, and I've mentioned it, ACY was the first to mention the possibility of a triple economic slowdown for Europe, China and the United States simultaneously in the second half of this year, with a recession definitely in Europe, recession risk for the USA, and a possible touch-and-go recession for China due to its lockdown strategies and the closing of the Shanghai port. That's a major impact for the global economy. But I just think with all of that going on in the Northern Hemisphere, perhaps there could be a fair bit of money up there on the other side of the equator that might think about coming down under, at least for a period of time. This should support the currency, but it looks like it's already had some benefit and then has fallen away. Again, I want to emphasize markets look torn between the argument in Australian markets look torn between the argument of higher commodity prices being good for the country, but Northern Hemisphere growth slowing significantly. We've just seen the IMF and the World Bank reduce their economic forecast. If you remember, at the last quarterly outcome for these organizations, IMF, World Bank, were forecasting strong economic growth for the world. They upped the ante, and I said at the time, well, they'll be unwinding those forecasts. So I'm happy to say ACY got that one right as well. I do think the outlook is for a slowing global economy. I do think it will be mostly, that slowdown will mostly visit, of course, Europe, the United States, a little bit in China, but China can come out of this more quickly than either of the other two superpowers or regions, super economic regions. So I remain a little bit skeptical on equity market rallies. I continue to suggest a little bit caution. I think you can still buy dips in the US dollar, which makes trading the Australian dollar a little bit problematic. Yes, I am saying it's all a bit hard at the moment. But I do like buying dips in gold and oil. I think commodities could have another big upwave, whether that's now or in 3 months' time, I'm not sure, after further consolidation. But I would suggest the risk is for yet higher commodity prices, yet another wave of inflation, just as the Federal Reserve is raising interest rates, making the outlook for the US economy really a little bit on the dark side. Clifford Bennett, Chief Economist, ACY Securities, thank you very much for joining me.